which I use as accurate. Now, how much was it? Hello guys, welcome back to Precise Pips with another tutorial. Today we're going to be talking about managing risk, as in knowing which lot sizes to use, and also we're going to be talking about trailing your stop loss. Now, a lot of persons will just go ahead and use one set stop loss or one set lot size, and that is not proper risk management. I do not recommend that. I recommend properly calculating your risk and knowing exactly which lot size to use to ensure that you're not over leveraging your account or maybe risking too much. And for the stop loss, persons just put stop loss at random areas below random structures, and that's not how I recommend trailing your stop loss. Now I'm going to go ahead and get straight into the video. Remember, I'm not a financial advisor, so whatever you see here, ensure that you practice on the demo before heading into the live markets. All right, so here I have a trade on UCAD with a 15 pip stop loss. I do not take 15 pip stop loss trade, guys. It's just a quick setup that I was running through. As you can see, I was just back testing. It's just a quick setup. I do not take 15 pip trades. They have the stop loss must be below 10 pips. So I didn't refine this one, but I'm gonna run through it. Now we're on the 1 hour chart. We caught this for 283 pips with a stop loss of 15.9 pips, and as you can see, it was directly to the T. Let me just zoom in on the chart here. Right here, and I trade smart money, guys, not retail. I trade smart money. All right, so as you can see, we got the entry to the T, no drawdown, and we caught the trade to our TP. Now, how do we calculate our risk? A lot of persons would probably just use one lot, two lot, five lot, because it looks like 15 pips, and they're like, oh, I'm just gonna use a one lot, and then boom, they get maybe a little pullback, and their account gets blown, and they're wondering what happened. Right now, how I calculate the lot size that I should use. My FX book. This is my daily bread, or my daily Bible, rather. I do not enter a trade without using my FX book. I'll drop a link in the description below as well. So you type in my FX book, you go to calculators, you go to position size calculators, and then on your currency pair, where it asks for the currency pair, you put in the pair that you're trading. In this instance, it's USD CAD, and then the account size. Let's say we're working with a $3,000 account. All right, and then we want to go ahead and we can either risk money or we can risk by percentage. Now, they say 1% of your account is good. I like to use money because sometimes my money risk is better than the percentage. All right, so let's do an example of 1%, and we have the stop loss, as I mentioned, is 15.9 pips, almost 16 pips. 15.9, and we calculate, and it tells us to use 0.24 lots to risk 1% of the account. Right now, I don't want to use 1%. I want to risk maybe $200 on that trade, right? Because $200 is okay for me. I take like 1 to 2 trades per day, and I'm out of the market. So $200, that's a lot. That's not a lot. Sorry, that's not a lot for me. So I'm risking $200. My lot size is gonna be 1.57 lots. So that's why I use money sometime instead of risk. So I'm risking $200 in a $3,000 account for one trade, and I'm going to use 1.57 lots. Now, if you don't trust my FX book, which you will trust it because it's almost accurate, like 99.99% accurate, you can also go to this app here, which is called FXTM, right? This app allows you to calculate risk as well as calculate your profits, right? Just type in pip calculator. I'll drop a link in the description as well. And you click the first one, pip calculator, FXTM Global. It brings you to this page. All right, it's loading. All right, so once it brings you to this page here, you're gonna go ahead and select the currency you're looking to trade in, which for now is USD, and we're gonna find USD CAD. That's a pair we're trading, and the pip amount we're doing for the stop loss. So it's 15.9 pips. And how many lot size did it say we should use? 1.57 lots. 1.57 lots is going to give us a total of $186. So we're actually risking less than the $200, which shows that my FX book is basically accurate, right? All right. Now we would enter that trade with 1.57 lots. If we lose that trade, we lose 186 to $200. Now, if we win that trade, this is 283.6 pips. Sorry for the background noise, guys. 283.6 pips. And if we calculate that here, that's $3,322.08. Now, it's recommended in Forex not to try double your account in one day or one trade. But look at this, guys. This is minimal risk trading smart money, right? Minimal risk, $200. That's not a lot to risk. So you're risking $200 on this trade, and this trade gave you $3,322. That's over 100% on your account. Imagine that. What if you had used the 1% that it recommended, right? Which is $30 with a 0.24 lot size. Look at this. 0.24. You've made $507. Nothing is wrong with that. That's a lot of profit as well. However, you can still risk the same money with the 1.57 lot. You can risk $200, sorry, with the 1.57 lot and make $3,322. So my FX book never fails, guys. I use my FX book to enter every single trade that I take. I never enter a trade without my FX book. If it's not coming up, I'm not entering the trade. And that's just it. Right? So I highly recommend using my FX book as well as FXTM, pip calculator, to, manage your risk, guys. Right? And I'm going to do another example. Let's move to the side over here. I was doing a few back testing tonight. All right, let's see. We caught some trades here. We lost some. This one actually hit TP, did it? Yes. Let's go down on the smaller time frame since that's where it is. Oh. All right, so this one hit TP. So this is 8 pips. Yes, this is a trade I would take. So 8 pips to catch 27.4 pip, right? So with an 8 pip stop loss, risking $200 again. Let's switch to money. $200, 8 pips. You get to use 3.13 lot size on a $3,000 account, and you're managing risk. So if you lose a trade, it's only $200. So 3.13 lot size. Imagine the first trade. If I had refined that trade down to my 5 pip stop loss, I'd probably be using 3 or 4 lots. So that would increase my profit to probably $9,000. Let me just show you. So say for instance, I got to use a 3 lot, 6,000, 4 lot, 8,000. That's the awesomeness of managing risk, guys. So it's not just about entering the trade and finding a good trade. If you don't use the correct lot size and manage risk the correct way, you're not going to be capitalizing on the amount of money you should be making, right? So with this 8 pip stop loss, it says we should use 3.13 lots, right? So let's enter that here. 8 pip, 3.13. That's $186 same way, right? Still $186. And we are aiming for how much pips? 27.4. That's not a lot of pips, but when you see the money, it's a lot of money because managing risk helps you to capitalize on your profit. So 27.4, 27.4. Look at that, $639 just catching 26 or 27 pips. Guys, 27 pips runs off very quickly, very, very quickly because this is like from 8 o'clock to 9, 10, 11, 12, 1, around 6 hours. So you're making that in 6 hours. How many persons are working that per hour? How many persons are working that per day? How many persons are working that for 2 or 3 days? Guys, managing risk is one of the main thing in Forex. Forex is not just about coming and finding good setup trades because you'll find the good setup trade and you'll take that trade without managing risk and you make $1,000 and I take that trade managing risk and I make $10,000. Even though we entered the same trade, managing risk made a big difference in the profit for that trade. All right. All right. So I'm going to run into the stop loss now, guys, and how to actually trail your stop loss. All right. So persons come in the market and persons just throw on a lot size. Or, well, let's not say throw on a lot size. They manage risk, take their trade, and they just go ahead and move up their stop loss. So let's just go in replay mode here. All right, so the trade trigger us in, and we're moving along. Now, we want to ensure that we're securing profits. So what do? We move our stops into profit. Now, where would I put my stop loss? Would I put it up here? No, because we might get a pullback here. We might get a pullback. So what do? I look for where an order block was, right? Which an order block was here. Look if it was mitigated, which it was mitigated by this candle. So the market has no reason to break past this candle. If the market breaks past this candle, then the trade is going into fail mode. So what do? We put our stop loss below this candle that took money. So our stop loss is now here. If the market comes back and take us out the trade, that means the trade is going to fall, right? So let's continue and see. All right. All right, so look at this. An order block was here. However, the market didn't mitigate this order block. It mitigated from up here, although there was also an imbalance here. So I assume it mitigated the imbalance. So now the market has no reason to come below this candle. If it does come below this candle, it means that there's going to be a failed trade. So we move our stop loss below this candle to secure our profit, or a little bit below it, right? Just to secure our profit. The market starts to move up. Now, there's also another order block here, right? This mitigated it, taking all the profits from down here into this candle. So the market has no reason to pass this candle here. If it falls below this candle, the trade is going into fail mode and it's going right back down to our stop loss. So we want to come out with as much profit as possible, which would be up here. So let's continue. All right, and we hit TP. Now, if the market had came back, it would stop us out here, right? And let me show you what I mean. The market, I think it's gonna come back down. Is it? Let's see. All right, you see, the market came back and it broke through the order block there. So we would have came out in profit if our TP was a bit too high and we fell asleep, didn't realize that we could take the profit or whatever, and we would have came out in profit here. So guys, try to trail your stop loss, or if you have a 5 lot on the table and the market moves 10 to 20 pips in profit, take 2.5 lots, break even after that, leave the trade to run. It's better to come out with some than none. And guys, scared money does not make money. So if you don't want to lose any money, do not trade forex. Losing is inevitable, guys. You have to be prepared to lose just as much as you're prepared to win. Just as how you want to leave your trade to hit your take profit, leave it to hit stop loss as well. Because unless the trade hits stop loss, it's still valid. If the trade comes right back to the T here and does not hit stop loss, you are still in a valid trade. So don't be scared, guys. And the moment you start to watch the trade, for instance, say you're watching the trade here and it comes here and it mitigates your order, right? Take up your order and move off and come back. You start looking at this and saying, oh my God, what's going to happen? We're going to get stopped out. Guys, your emotions is going to kick in and you're going to be tempted to come out of the trade. Trust me, it does not help to sit and watch the trade. And guys, if you need money to solve things in your life, do not think about trading to get it. Guys, you see, the best thing you can do is not think about the money when you're trading. Think about the quality setup and winning the trade instead of winning the money. When you start thinking about the money, you're going to be watching the money. And when it starts to decrease, you're going to be pulling out of the trade. And guess what's going to happen? Trade is going to continue in your direction. What happens after that? Your emotions kick in. When your emotion kicks in, your setups fall off, everything, you start losing trades back to back and you don't know what you're doing wrong. Sometimes your setup are correct. However, your emotion plays games with you and you're just not mentally ready for the market and you're gonna lose a lot of money, guys. So you have to know exactly what you're doing. All right, so I'm not going to go any further with this video. It was just a quick short video to teach you how to know which lot sizes to use and how to trail your stop loss. All right, guys, so look forward to our next video next Sunday. Right, and remember, like, subscribe and share the channel, guys. I'm dropping educational contents every week. Right, I'll drop the description. I drop the link in the description below for my FX book and the pip calculator FXTM, and as well as my Discord. If you want to join our winning group, just reach out to me via Discord and ask me how, and I'll fill you in on the information. I do provide trades in the free groups as well, guys. All right, I do help them make money. So, guys, thanks again for watching the video. Enjoy yourself. Enjoy the rest of your weekend, or your new week, rather.